Good morning and welcome to another edition of the Market with Legacy Capital. We'll be diving straight into the fundamentals analysis. We'll be looking at what to expect from Monday the 23rd of September right up to Friday the 26th of September, 27th of September, sorry. So this is what we should be expecting as fundamentals are concerned. We have the French flash manufacturing PMI that will also be released, and it will be affecting the euro, it will be affecting the Great Britain pound, and we also have the flash manufacturing PMI that will be affecting the United States dollar. On Tuesday at 5:30, we'll be having the cash rate and the RBA rate statement, which will be affecting the Australian dollar. Then we have BOJ speaking, that will be affecting the Japanese yen. We also have CB consumer confidence, 10 Tuesday 3 p.m. that will be affecting the United States dollar. We also have the Governor Maclean's speech that will affect the Canadian dollar at 6:10 p.m. Then we also have the Australian dollar CPR that will be coming up on Wednesday at 2:30 a.m. Then we also have a monetary policy assessment for the Chinese franc and the SNBS policy. Then we do have final GDP, that's gross domestic product for the United States dollar, and the unemployment claims still on Thursday. Then we have the Fed Chair Jerome Powell will be speaking at 2:20 on Thursday too. It's a very important news to look at. Then we have the gross domestic product on Friday for the Canadian dollar and the core price index for the United States dollar on Friday. Those are the high impact fundamental news that we should be looking at as we move into the trading week, starting from Monday 23rd right through to Friday the 27th of September. From the fundamentals news, we have to look directly at the American dollar index, what's normally called the DXY, because we cannot be looking at our currency pairs while we ignore the movement of the DXY. Last week, we had anticipated that the DXY was going to maybe rally up a bit, then move down to the level of about 99.9, but it did not get to that level of 99.9. It stopped around 100.2 level, but at least it did move towards our projected levels. So this morning, the first thing I want us to take into consideration is the fact that for a period now, the DXY has been consolidating. The DXY has been consolidating. So what is already so certain is that within the consolidation, what is our expectation? Within the consolidation, we are expecting to see the DXY to move down to this level and maybe rally back up and maybe drop down. That's what we are expecting. But now we already know that the DXY has boundaries, which is within this zone. If it breaks it, then there can be a possibility that it can get to our level of 99.924, which of course is a key zone. If it doesn't, if it rallies up, then we can be expecting the DXY to get to this level of 101. We can be expecting it to get to the level of 101.7 if it breaks up and then gathers momentum to the upside. But for now, since this consolidation is coming within a downtrend that originated from the level of 101, in fact it originated from a level higher than that, we should be expecting the DXY to gather momentum and rather move down. That should be our great expectation with DXY on the 4 hours time frame. So what we should be peculiar about as far as the DXY is concerned this week is to see the move breaking out of the consolidation or movement still within the consolidation. But our bias is to see the DXY breaks below the consolidation and move towards a key level of 99.924. So watch out at the market as far as the DXY is concerned, and know that before we take a conclusive direction about the DXY, we need to see it break a key level, which of course has to be this level of 101.045, or it breaks the level to the downside of 100.478. once we see that if it breaks 100.4748, we will be expecting it to get to 99.924. If it breaks the upper level of 101.02, we should be expecting to see it push right up to 101.768. So those are expectations as far as DXY is concerned. As you move into the market, move with an open mind. Let the market direct you. Do not make the mistake of imposing your belief on the market. No, let the market direct you on what to do. From DXY, the next thing we should be looking at is a Great Britain pound United States dollar, GBPUSD, or what is normally called GU. Onto GBPUSD, we can see that for a long period of time, it has behaved that we have it level. So these are measure trend line, but now if you look critically, we also have a trend line like this from this level. So this is what we are looking at. So if to say that we are entering into the market on our 4 hours time frame with GBPUSD, what should be our expectation? Obviously, when the market opens, we should be expecting to see that the market retrace back a bit. We have a power week here, but we can't conclude that this will be sufficient. So that is the first option, is that the market retrace to this level, react to this base, then pushes up, or better still, the market retrace from this level, move towards the trend line before pushing up. Those are the two options. Another option could still be that when the market opens, then the market can retrace back to this previous resistance zone, now resistance becoming support. So when the market opens, the market can push down back to this zone before pushing up. But now one thing is certain: when market opens, we must see the market pushes down before moving up. So we should be conscious of the fact that we have a trend line, and the second, we have two trend lines, a measured trend line and a minor trend line, and we also have a key zone that have been mitigated, which of course have acted previously as a resistance. So we should be expecting that the key zone that has acted as a resistance can possibly act as a support now in the uptrend. So the market can slightly retrace back before pushing up. But as far as the market is concerned, what we should be expecting with DXY is to master our key levels, master our areas of demand and supply, and see how the market reacts to. And the only thing we should be interested in is to make sure we get buy entries. We should not be in a hurry to sell for now, because if we are selling, we will be trading against the market. So our interest should be in looking at buy positions. Depending on the momentum of the market, this base here can actually act as a turning point for the market to push back, then retrace from there. Or if the market breaks it, maybe clearing of the liquidity that is here, we should also be expecting the market to get to this level before we see it pushing up. So as far as GBPUSD is concerned and market open, we can see a consolidation, which of course will build momentum for the market to push up, or we can see the market retracing back to this level because of this base to push up, or the market breaks it, clears up this liquidity, then comes to this zone and then gather momentum from this zone to push up. But now, unless you are a scalper, don't be in a hurry to take sell position. Be patient enough and get your buy position. Now, what are the areas, or which areas or which zones are peculiar for us to look at them for take profit? If you look critically, you will notice that from this level on the daily time frame, the market has already broken this zone. So the next zone we should be expecting a take profit there should be around 1.34 270, which of course is this zone. And if it breaks the zone, we should be expecting the market to get to 1.36436. So those are the key levels you should be expecting to see the market getting to in this week that is starting from the 23rd right up to the 22nd of September. On from GBPUSD, we'll move straight to EURUSD. With EURUSD on the daily time frame, we'll notice that the market is actually moving, or the market is actually at a zone that has acted as a key zone on the daily time frame. But from there, we have another key level, which of course we can clearly illustrate. If you look at the line chart, you'll see better. If you look at the line chart, you see better. You'll notice that the market is currently at this zone, and from this zone, if the market successfully builds momentum and break this zone, we should be expecting the market to get to this level of 1.14693. So obviously, with the corresponding decline in the value of the American dollar index, we are expecting to see that EURUSD pushes up more and more. So what our expectations is to look at the key levels through which we can actually place our buy orders with EURUSD. Our keen interest is to buy. Our keen interest is to buy. And if you look critically, you'll see that initially last week within the daily time frame, that was on Tuesday, the market created a base, okay, and then from the base there was a rally. So obviously there is a possibility that the market can open and we definitely see a consolidation around this zone. Then obviously after the consolidation, what we'll be seeing will be a push to the upside. So the market can open and we see something like this, like the market consolidating, and from there the market keeps pushing up to our key zone. If not the case, then what we can possibly see is that the market opens and retraces back to this base level before moving up. If to say that the market breaks this base level, we have just one expectation, and that expectation will be to wait for the market to pull down to the next demand zone, which of course is this zone. Remember, we are working with the daily time frame. So if the market retraces from the current level and then breaks this zone, then we can see maybe a little bit of a reversal and momentum comes to this zone, and then the market can possibly push up. So that is what we are looking at the EURUSD. Onto the 4 hours time frame, I strongly believe that we'll see more key levels to look at. Okay, so now on the 4 hours time frame, what do you see? You see clearly that this is a key zone and liquidity is seated below this zone. So there is a high possibility that the market can push down, clear up this liquidity, fill the fair value gap that we have in this candle, then comes to this demand zone before pushing up. So it is safer to look at a possibility of the market retracing back to this zone and buying from there. But now we have to always be very smart when dealing with the market. If the market opens and we are seeing that the market is consolidating within a zone, we should not be expecting the market to maybe fall again to a demand zone. No, we should be expecting the market to consolidate. Within the consolidation, the market is building momentum. So we should expect the market to consolidate, clear up liquidity within the consolidation zone and push up. But now our overall bias with EURUSD is to see the market moving towards a buy. For now, unless you're a scalper, you shouldn't be taking overall sell positions, because the market has been breaking key levels to the upside, telling us that the only thing we should be doing in the market is to be buying. That is what we are looking at this week. I wish and I pray that you make more money. And please don't forget to subscribe to our channel. And of course, don't forget to share our content so that I can get the widest possible attention. Thank you very much. See you next week.